Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because Bitcoin has officially entered the expansion phase. Now this is quite a special moment because for months now we've been talking about how this was likely a mid-cycle reaccumulation period for Bitcoin, kind of like what we saw in 2020, 2016, and in 2012. And the reason we were pretty confident that it was a reaccumulation and not a cycle top that we saw in March was because Bitcoin usually sees cycle tops on these major liquidity grab fakeouts to the upside, where we end up seeing a clean break above resistance, everybody piles in and gets euphoric, and then Bitcoin closes below that level. We saw the same thing once again in November. Breakout, everybody gets euphoric and piles in. We fall back into the range. We saw it again with the Luna collapse in March of 2022, but that is not what we saw in March when Bitcoin reached about 74K, got rejected, sold off aggressively, and has put in these very conservative lower highs and lower lows and had this very methodical downtrend while larger allocators took their time accumulating this asset. And the great thing about a very clean breakout like this one is as long as we're closing weekly candles above 74K, there's really no good arguments for short-term concerns. But as soon as we close back below that level and confirm this as a fake out, then we can start talking about panicking and having larger concerns for major downside. But as of right now, I mean, this is an incredible weekly candle that's closing thousands of dollars above the previous range high and above our previous swing top of March 2024. And this morning was pretty special because we did see Bitcoin hit 80K for the first time. And we already have people like Plan B coming out the woodwork with these huge price targets of 500K. We have the Bitwise CEO saying that Bitcoin won't have to worry about overvaluation fears like stocks do. And then there's also people on the other side of the coin saying that Bitcoin is ripe for a major leg down immediately now that price is nearing 80,000. And both of these approaches are a great way to lose money, being overly optimistic and having these huge price targets, as well as shorting the market when it has clear momentum to the upside and expecting a major leg down is a great way to lose money as well. So I prefer this approach where no rash action is needed. And as of right now, with this clear all-time high breakout, we have to expect short-term upside. But if we end up seeing a deviation and a fall back below the range, we can start talking about the difficult cycle scenario or perhaps something worse. But as of right now, it's pretty hard to make any strong arguments for bearishness now that Bitcoin has entered price discovery and entered its expansion phase. So for now, we'll just patiently see what Q4 has in store. November continues to look quite great. And usually whatever we see in November ends up carrying over into December. So perhaps we can see a nice rally going into the end of the year as long as Bitcoin maintains its current structure and maintains weekly candle closes above 74,000. And we're definitely seeing some good early signs out there of retail coming back slowly. We're seeing traffic to exchanges starting to increase even by small amounts like 8%. We're also seeing more and more crypto-backed candidates winning in the House and in the Senate, which goes hand in hand with the election outcome we saw for the presidency, which is pretty bullish for this overall space in terms of regulatory clarity. And we continue to see these spot ETFs getting incredible inflows. BlackRock's Bitcoin ETF officially flipped their gold one, and it hasn't even been live for a year yet. And this is definitely going to bring in a lot of headlines, especially because now allocators can buy Bitcoin in their brokerage where they hold their stocks and bonds as well. And they don't have to overcome the friction of opening a crypto exchange account. And we've been seeing incredible inflows into these ETFs over the past few months and especially over the past few days. These huge inflows tend to mark some temporary local tops before some corrections, but very hard to be bearish on this trend in the medium to longer term because we're seeing so much supply being absorbed by these spot ETFs. Now, of course, it's not always sunshine and rainbows. We still have global liquidity going down when you account for the Fed balance sheet. And this really makes this rally that much more impressive because you can really tell that this rally is driven by the excitement surrounding the election outcome and the fact that this market may finally be getting some regulatory clarity. And I find it very impressive that Bitcoin has been able to break out an enter price discovery while the dollar index is rallying higher. Usually they have an inverse correlation with each other, and this rally is starting to rhyme more and more with what we saw in 2016, where the dollar index rallied into the end of the year, Bitcoin slowly grinded higher as well, and then starting in the post-halving year of 2017, the dollar index rolled over aggressively, and that's when Bitcoin really skyrocketed. So maybe we're going to see something like that again this time. It's way too early to know, but we have seen these small periods in the past where the dollar index has rallied higher, Bitcoin was able to grind higher as well, but then once the dollar index really rolls over, that's when Bitcoin can actually go vertical and we can see the alt season that everybody is waiting for and praying for. So for now, we remain cautiously optimistic. We do have a Fed meeting coming up in December. Perhaps they'll announce QE there. We also get their economic projections that gets updated every quarter in December as well. As of right now, the expectation is still a 25 basis point rate cut, but we'll be seeing what their projections actually say for the coming year, and perhaps that'll finally mark a top in the US dollar index, but as of right now, we just have to wait and see. As for my portfolio, I really haven't felt the need to change much. I'm pretty comfortable with my holdings, and for those of you that have been following the channel for the past year or so, you'll know that I make very small changes to my portfolio. These are the assets that I feel the most comfortable holding and that have the clearest narratives in my opinion. Perhaps this cash will go into riskier projects at some point, but I haven't felt the need to make those investments quite yet. Holding Ethereum has been very painful for the majority of this year, but now with this current election outcome and what we're seeing in the House and the Senate and the hopes of a more friendly SEC, it does look like the narratives are finally improving, and it's nice to see that all three of these assets, Solana, Bitcoin, and Ethereum, are above the benchmark that I'm trying to outperform with my portfolio, the S&P 500 and the NASDAQ 100. So it's pretty incredible that after underperforming the NASDAQ and the S&P 500 for the entirety of the year up until about November, Ethereum in just one weekly candle is now outperforming both of them on a year-to-date basis. And this weekly candle for Ethereum looks absolutely insane. We completely broke out of the accumulation range we were in for months, and we were able to reclaim our trading range that we were in from about February to July of this year. So for now, we would expect a little bit of consolidation here, but it does look like it wants more upside. And we're seeing some nice confluence with the fact that the spot Ethereum ETFs are finally getting some inflows ever since Trump won the election. And apparently we've entered something called scarcity mode, whatever that means, but it sounds bullish, and supposedly it's paving the way for Ethereum to rally to 6,000. No idea what scarcity mode is, but I am bullish Ethereum in the medium to long term, and it is a good looking weekly candle, so they can call it whatever they like. And apparently the SEC is mulling over approving some Ethereum ETFs as well, just like what we're expecting for the Bitcoin ETFs. And that's just going to improve liquidity for these ETFs as a whole and make larger allocators comfortable putting more money into these ETFs because they can easily hedge their exposure with options. And speaking of weekly candles, I don't even know what to call this weekly candle on Solana. We went from the 20-week moving average to breaking out of the range within 7 days. A weekly close above 200 is a confirmed breakout, and our next target would be all-time highs. Again, consolidation is normal, and there can always be small corrections because we're seeing so much bullishness starting to pick up ever since we got that election clarity, but very hard to not be incredibly bullish on this chart if we get that close above the range high back from March of 2024. And I'm expecting Solana to continue to outperform both Ethereum and Bitcoin if Bitcoin does remain bullish and we see this expansion phase continuing. So for me, the strategy for the remainder of 2024 is quite simple. I'm not really interested in buying Bitcoin, Ethereum, or Solana at current prices. I'd be much more inclined to look at putting my cash into some riskier short-term positions, but I haven't felt the need to do that quite yet. For now, I'm quite happy with the performance my portfolio has seen for 2024 so far, and especially the past few weeks, ever since we got that election clarity. And for now, there's not really much to do but just sit on existing positions and just enjoy the rally that we've waited so long for during this painful choppy period. And I am going to miss our how low will Bitcoin go chart. It served us very well in 2024. I believe we released it in May of this year. We said it was very likely Bitcoin would trade below 60,000 at some point, and it was possible that Bitcoin would trade below 50,000 at some point, but we said it was unlikely that Bitcoin would get as low as 40,000, and that seemed to play out quite accurately. And I'm looking forward to making a 2025 version of this chart quite soon, because these price targets are becoming less and less likely now that Bitcoin has entered price discovery like this. So we'll make an updated version with the newer support levels once we enter 2025. But looking forward, economic data still looks fine. We're going to continue to watch inflation closely, and PCE and core PCE are still heading in the right direction. And we're not seeing any major warning signs in the labor market quite yet. Layoffs are fine, continuing jobless claims are fine. We are seeing a slowdown in job creation, but we haven't seen job losses quite yet. And the unemployment has been working its way up slowly, but we haven't seen any big spikes there quite yet either. GDP remains positive, and if we look at traditional markets, we're expecting a pretty solid week of price action for the S&P 500 this week, following what we saw last week, and we're still expecting the S&P 500 to lead Bitcoin in price discovery, because ever since we saw that price discovery break on the S&P 500, Bitcoin followed soon after we got that election clarity. And as we look forward in the longer term, as long as the federal government is running huge deficits, even outside of recessions, we expect the money supply to increase alongside that debt increase as that debt gets monetized. So I remain bullish on assets like the S&P 500 in the long term, and I remain bullish on fixed supply assets like Bitcoin in the longer term as well. But anyway, we'll continue monitoring the data and the price action and see where this Bitcoin expansion phase takes us. As always, let me know what you expect. Hopefully you're all enjoying the appreciation in your portfolios. As always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.